Hello, and welcome to today's video. Today's video is about the Elliott Wave Theory. Elliott Wave Theory is very important to me. I use Elliott Wave Theory all the time. It's a little complicated, but I'm going to try to best explain the Elliott Wave Theory to you guys today in this video. So the first thing that we need to know is the Elliott Wave principle. There's three unbreakable rules. If one of these rules is violated, the structure is not an impulse wave. The first rule, wave 2 cannot retrace more than 100% of wave 1. So we have wave 1 here, comes up, wave 2. This point right here, wave 2 cannot go below wave 1. If it does, this is not an Elliott wave. The second rule, wave 4 cannot move into the territory of wave 1. So this is wave 4 right here. It cannot come into the territory of wave 1. And then we have the last rule, wave 3 cannot be the shortest among the wave 1, 3, and 5. So this is wave 1, this is wave 3, this is wave 5. Wave 3 cannot be the shortest of these impulse moves. So wave 1, price begins to bounce higher as a long sustained downtrend. The sentiment in the market is very bearish and then starts the movement of wave 1. So this is downward trend. Wave 1 is going to start. Most people see this upward price movement as just a bearish market rally and as a good opportunity to initiate a new short position, or they can also add the extending short positions. Wave 2 moves counter to wave 1 as a retracement of a long position of wave 1. So wave 2 will retrace wave 1 by either 50% retracement, 61% retracement, or 78% retracement. So basically, wave 1 comes up, wave 2 is going to counteract. Investors and traders feel secure that once again that the downward trend is going to continue. However, the market would fail to break past the low of wave 1. So basically, market is going to come down. They think that it's going to be a downward trend, but wave 2 does not go past the initial downward trend, does not make a new lower low. This is an essential rule that you have to remember. Wave 2 cannot retrace below the start of wave 1. You have to remember that. That is the initial step 1 and the rule number 1 that you have to know about it. Wave 1 starts here. Wave 2 cannot come lower than wave 1. Wave 3 is usually the biggest and most powerful wave within the overall Elliott wave structure. The sentiment in the market is generally growing as optimism. So basically, wave 3, everybody sees that wave 2 is here, and then we start seeing more momentum coming, and everybody's like, hey guys, we're all jumping on board, we're all jumping on ship. So basically, we're going to start this move all the way up, and that's why the impulse wave of 3 is normally the biggest one. Wave 3 is normally where I like to get in on. Trend has shifted, and the market is poised to move higher. Wave 1 swing high has been broken. After the broken of the swing of wave 1, price begins to accelerate upward as more and more traders recognize the bullish sentiment and take long positions. So basically, everybody sees in here and everybody's knowing that this is actually something that's happening and this is going to be a big move. So everybody starts joining in on the party. Join the trend as quick as possible in order to take advantage of this explosive movement in all of the characters of the wave 3. Wave 3 offers very little in the way of pullbacks, and when they are present, they tend to be very shallow. So basically, it's very, very small pullbacks when it comes to wave 3. Like I said previously, wave 3 is where I like to get in on. Wave 4 will be shallow retracement and often terminates around 38% or 50% of wave 3, less aggressive than the wave 2. So basically, you're going to see wave 4 pullback coming down. It's going to be shorter than wave 2 because there's not much steam happening over here as sellers try to take over, but they don't have enough backing for it. So wave 4 is normally going to be shorter than wave 5. Shorter than wave 2. Remember, this is an unbreakable rule. Wave 4 cannot overlap into territory of wave 1. Let's take a look at that. It cannot. Once again, it shall not go into the territory of wave 1. So this is wave 4. This is wave 1. It cannot enter into this territory. Okay, that is an unbreakable rule. That is rule number 2. Wave 5. Wave 5 is going to go in the overall direction similar to wave 1 and 3. During this progression of wave 5 is almost everybody's understanding that this is a bullish move. This is called the retail wave. During wave 5, most retail investors are driving prices higher and more extreme values. More in the direction of overall trend, similar to wave 1 and 3. During the progression of wave 5, almost everybody is bullish. Lower volume. Along with the momentum, wave 5 will also register low value in comparison to wave 3. So basically, this is for the people that kind of came a little late to the party. So basically, we come up for one, we come down for the correction. Everybody knows that this is a great party. We're taking our money now and coming down. And everybody's like, whoa, 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 I still want to get a little bit. And we're going to come on in here. So like I said, wave 5 really isn't going to be as huge as wave 3 as the momentum is starting to slow down. Wave 5 projections. Projections. I don't know what's wrong with me today. Today I'm just like stuttering. Wave 5's projections. Wave 5 will terminate under reaching the length equivalent to the length that we see in wave 1. The next most likely progression of wave 5 is a distance for 61% of the length of wave 1 and measures to the end of wave 4. So basically what that means is that this is going to it's going to basically recreate wave 1 and with the same ranges. So say if we went 5 to 10 pips or 5 to 20 pips in wave 1, we're pretty much going to do 5 to 20 pips in wave 5 also too. So it has lower volume. After the end of wave 5, we're going to now have the correction wave. Okay, that will be the ABC correction, which is going to happen after this. So we have wave 1, wave 2, wave 3, wave 4, wave 5, and then afterwards we're going to have an ABC correction. So, but as of right now, I just wanted to go over the Elliott wave. So I hope this gave you guys a little more insight of the Elliott wave and what I'm looking for the Elliott wave. The next video that I'm going to do, or the videos that we also have in the chat in this channel, is going to be the ABC correction. So we will have the ABC correction video coming up shortly for you guys. So just like, share, follow, and look forward to that video also. But right now, this has been the Elliott Wave Theory, wave 1, 2, 3, 4, and 5. Remember those unbreakable rules, guys. Follow it. Good luck trading.